big IPOs. Gopal Snacks is the other one. They're looking at raising 650 crore rupees. Price band 381 to 401. Issue opens on 6th of March, and in terms of the profitability and EBITDA, those numbers will just come up on your screen. 5.5% from FY22 has jumped to 14%. So let's touch base with the management now. Raj Pipni Bhai Havadevi joins us now. Hadvani, I've got the name right. Raj, good morning. Thank you for joining us. And Mukesh Kumar Shah, CFO of Gopal Snacks, also joins us. Gentlemen, good morning to both of you and thank you for joining us. Raj, I'll start with you. I'm just looking at first the trajectory for Gopal Snacks in terms of where the margins are and where things have moved. In between 3 quarters, your margins have gone up from 7% to about 14%. Why is that, and is it sustainable?
First of all, previously, in Corona time, we were giving 5 grams extra compared to our competitors. And after Corona, you can see in the correction in 2021-22, we have matched our grammage with our competitors in our market, and that's the reason you can see the spike in the margin. Margin was there, but it was going out because of we are giving more 5 grams compared to our competitor, and our grammage offering as of now is 25 grammage. So you can calculate the 25 grammage and the 5 grammage is around 20%.
But specifically, your margins have expanded, your PAT has doubled between FY20 to FY24. Is this largely because of market share gain or new capacity which has got added? Because I'm simply curious to understand that while last 24 months you've seen an exponential surge at a time when commodity inflation was very high for the sector per se.
I mentioned that previously compared to our competitors, we're giving 5 gram extra. 1 gram is equals to around 10 lakh around rupees a day. So it's around 50 lakh rupees a day is 5 grams. For an example, we were giving 30 grams previously, and now we are giving 25 grams. So the change is around 20% in our grammage, which you can see in our balance sheet.
If I could get you in on the discussion as well and talk about purely the IPO. As we understand, it's an out-and-out OFS. Do you have any funding requirements other than that? Because all the proceeds of the IPO, they're not going to go back into the company books.
As of now, company is cash-rich. Company don't have any debt, and around 100 crore we have profit in our EBITDA. So we don't require for any current business, and we do have our capacity more than enough for next many years. So in capacity expansion also we don't require any funds.
Okay, right. Mukesh, if I could get you in on the discussion then, because as we understand, Rajkot, Modasa, these are some of your unutilized capacities. What's the plan here, and what's the capacity utilization that you're currently running at? We also understand that purely the Gujarat market accounts for 79% of your total revenues. Is there any plan to diversify into any other states or geographies?
First of all, I will tell you that we have 3 manufacturing facilities. 2 is in Gujarat and 1 is in Nagpur. And our Nagpur facility is much bigger, and we are our next growth comes from Nagpur facility because it's a central part of the India, and we will be growing our Nagpur plant in next upcoming years. In Modasa, we have facility for the chips plant for our potato-based products, chips and other products. And due to little bit grammage reduction in last few years, we have excessive capacity in our transport plants as well. So in upcoming years, we run only on 35-40% capacity only. So in coming years, from any market, if we see any growth, we can utilize this capacity and maximize our production.
Okay, so that point is taken, but if I can toss it to Raj, Mukesh, whoever wants to take this. Going forward, what kind of expectations are there? I know you can't talk numbers, but do you expect a significant acceleration from here on, both in terms of the product mix change, and that is something that should aid your margins on a significant basis?
Shall I take this call?
Sure, either of you, please.
Yeah. So just to give a perspective, if you see our revenue mix currently, ethnic snacks contribute to 57% of our overall revenue. Western snack is something which includes snack pellet and wafers, contribute 31% of our revenue. So as we grow outside Gujarat and Nagpur being centrally located, we have seen traction of Western snack outside state. So the mix will change from 60-40 to maybe 50-50 in next 3-4 years. So that is the revenue mix what we see in future year. In terms of growth, industry estimate is that snack industry will grow at 10.5% year on year, and we expect that will beat industry in future year. Our growth will be higher than the industry. That is what is our internal estimate.
But the trend that we were seeing in the industry was that there was a bit of a downtrading that happened, and for you as well, we understand that it's the smaller value SKUs that tend to do better. Is that something also which will likely to continue, or are you seeing some signs of a bit of a reversal there?
No, so current mix between 5 rupees and 10 rupees and above is 75-25%, and our offering at 5 rupees is 25 grammage, which is similar to the other players in Gujarat and bit higher compared to other player in outside Gujarat. So, and we have packs at 10 rupees SKUs and larger packs also, and definitely there will be a shift in the mix also going forward between 5 rupees and larger packs.
Mukesh, are you looking at expanding into new categories which are just beyond comfort snacks? I mean, frozen food, sweets. Are you looking at expanding in new categories also?
You can see we have more than 80 products in our portfolio. So as of now, we don't have any plan to expand in those categories. But yes, we have other part of the India where our whole category is not present. So as of now, we try to expand our categories in other part of the state where we have just started a few years back. So that's the plan as of now.
Finally, Raj, the fact that we asked you this question, but you are doing an OFS, the company does not get any money. So what would be the equity structure for the promoters, and do you have any PE investors where the dilution will happen? What would be the equity structure of the company?
So can I take this call?
Yes, please.
So currently the equity structure is promoter and family is holding 93.5%. Post OFS and IPO, the structure will get revised to 81% being held by promoter and rest of them will be with public. So we don't have any PE investor as of now. Last year in October, we did a pre-IPO round where we have diluted our 4% stake. There were a couple of investors like White Oak, 360, Access AIF who have invested in our business.
Okay, gentlemen, both of you, thank you so much for joining in, Raj as well as Mukesh, and good luck with the IPO once again.
Thank you.
Thank you.
Okay, on that note, we're going to take a very quick break. We're doing okay for the index.